welcome to Enterprise Inc. Now, every week we talk to you about life from the perspective of the entrepreneur. But an entrepreneur without funds is a gardener without a garden. So this week we thought we'd cross the line and try and get you the investor's point of view, specifically the private equity investor's point of view. So this week, Enterprise Inc. comes to you from the location of the Private Equity International India Forum, one of the largest gatherings of its kind of LPs and GPs in the country. In fact, we have private equity investors from across the world attending this forum. Over the course of the next half hour, we're going to talk to you about the state of the private equity industry in the country, especially after the downturn of the last 2 years, whether fund flows are coming back, what private equity investors think of the valuation run-up in the equity markets, whether they've started talking exit strategies for some of their investments, and we'll get you heated debates on the concepts of buyouts and pipes.
More encouraging is the confidence that PE investors have in India.
As Deepak Parekh puts it, private equity doesn't need India. India needs private equity. A valuable source of growth capital, private equity has funded all kinds of companies in India Inc. From the big boys like Bharti to new kids on the block like Mundra Port. In 2008, $11 billion of private equity money was put to work in 400 deals. This year, thanks to the global fund crunch, that number is down to 2.3 billion. But after months of a cash drought, are things finally looking better?
The mood has been more upbeat than we expected. I think probably speaks to the fact that the Indian economy has had what could be called a good recession. It dealt with the crisis very well, and I think that is showing in the attitude of both local managers here, but also investors and managers coming in from overseas.
How closely the PE market has been linked with the Sensex, and the fact that every time it shoots up, the valuations go up as well.
It's no longer a game of private equity players being just plain vanilla capital providers.
It's certainly taking longer for funds to raise money now.
Yeah, it's going to be a difficult but very interesting time for private equity business in India.
A mixed verdict that, so we thought we'd dig a little deeper. With Louis Miranda of IDFC Private Equity and Anil Ahuja of 3i. IDFC is the sponsor investor and investment manager of the 2003 India Development Fund, which has raised 844 crore rupees. IDFC Private Equity also manages a second fund, the India Development Fund 2, with a corpus of 2,740 crore rupees. IDF is an infrastructure-focused fund that's invested in power generation gas pipelines, hotels and port projects. 3i India has an investment portfolio of about $1 billion and is invested in companies like Nimbus Communications, OOH Media, International Tractors and UFO Movies. Last year, 3i raised a $1.2 billion India Infrastructure Fund.
So, Louis, Anil, thank you very much for joining us. Let's do a quick assessment of where we stand today in the private equity industry. What's looking good? What's not looking good? Have valuations run up steeply, or is that only a concern for those private equity funds that actually are investing in the public markets, Louis?
Today it's a lot like in the old Western movie, The Good, the Bad and the Ugly. There's some good parts, there's some bad parts, and there's some really ugly parts. The good part is that on the exit side, things look good because there's sort of a lot more interest in IPOs at this stage, and that's good for us. Some of our companies are doing well. But the bad part is that valuations for us to do new deals is still a challenge. And it's a challenge because valuations haven't sort of come down the way we'd like to see it, and promoters, family-owned businesses, etc., are still seeing valuations at different levels. And the ugly part is that because of what happened in the last 18 months, some companies are hurt. And therefore there's a lot more work involved. And the companies, I guess, which are hurt the most are the ones which were, in our portfolio at least, which were focused on the external markets. Okay. Either because the global market sort of customers dried up or trade volumes came down that were impacted. But by and large, it's not as bad as what it was at the beginning of the year. Despite this unseasonal rain, there is still some sunshine out over there.
Anil?
No, I'd agree with Louis, but valuations has been a moving target which has moved very rapidly over the last 12 months.
Right.
In fact, we used to joke that in the beginning of the year, no deals were happening because no issuer would issue paper at that price. And now no deals are happening because no investor wants to buy paper at this price. Yeah. So the other problem that we have is that our public market and our private market is intertwined quite severely. And all deals that happen in the private market are essentially using benchmarks or comps of the public market. And when the public market goes from 8,000 to 17,000, you can be clearly, there's no question that investors like ourselves are going to have a very tough time trying to get to grips with these valuations.
We've come out of 2 really tough years. I'm not sure if we've fully come out as yet or not, but there's been a lot of talk on how the kind of impact this has had on the fund industry. And I'll say the fund industry because in the last, a year and a half ago, the lines had blurred between what kind of investment hedge funds were making or private equity funds or venture capital. Anyone who had cash was putting it wherever they could. Have those lines sort of de-blurred for, now at least, Lewis? And is it looking better? What about talk of funds actually being up for sale?
2 things. One, I think that LPs are going to be asking the tougher questions. How have you made the money? How have you managed it, as opposed to just looking at what returns are made? So that's going to sort of help define and reduce the blur between various sort of businesses. I don't know whether there are going to be funds which are available for sale. I've not heard about them, but clearly there are going to be some funds who will never raise another fund again. And that's going to be tough for them. There's already been some funds where investors have come back and said that we won't put in more capital. We're going to cap the commitments made and we're not going to put in more money. That's the tough situation people are in today. People are talking about governance, people are talking about track records, and people are in the and this is in addition to the fact that there are a lot of LPs out over there in the West who are struggling for liquidity themselves.
Sure.
So it's going to be difficult, not just from the way GPs have performed, but also from the fact that LPs have less cash possibly to put into private equity.
The problem that we have in this industry, not just this industry, I think the broader industry, the financial service industry, is that most people have a very short memory, 3 weeks at max. So you see the CNBC ticker going up for 3 weeks in a row and you say, our life is good, let's start doing everything all over again. Who in 2007 could have told you that you were 4 years off 2003?
Right.
So 2003 to 2007 was a wonderful period. 2007 to 2009 was a wonderful period the other way around. Yes. And I think 2009, if you look at the last 6 months, again, who's going to tell you that the world has changed or that anything is different? These are, 1,000 points in 2 weeks are movements that we've got used to now.
If valuation was one thing that both of you spoke of, what do you think are some of the other issues that are currently sort of gripping the industry to deal with outside of the always existing issues in India of regulatory limitations and things like that? I mean, I can't bear to hear one more private equity person tell me we can't do due diligence. So,
I think the one huge issue facing the industry is this whole issue or the uncertainty around taxation and laws.
Okay.
And I think that's just a big one, but that's a subject for a different discussion.
Lewis?
I tend to agree with them. I think the big issue today is this whole direct tax code, and that's going to sort of create a lot of uncertainty, and that uncertainty is going to be bad for the industry, because today we're in a situation where actually India needs investment for growth. People overseas have realized that you want to put money where you can see growth, actual growth, and India clearly is one of the handful of countries which see it. Right. And if this uncertainty is actually going to slow down in money coming into India, I think that's a disaster. And I think this is something which is going to have a serious medium and long-term impact.
Is money coming back this year? Have you seen it coming back in the last few months? Are you seeing funds want to raise more funds in that sense?
GPs raising money?
Yeah.
There have been a couple of funds who have been out and successfully closed funds, but clearly the amount being raised is a fraction of what it was in the past year.
Is money coming back?
I think money is coming back, but it's now starting to reopen. So I think the big money will come in 2010 and over 2011, because I think most LPs had to deal with the shock of asset allocations and value corrections, etc. Over the 2007-2009 period. And I think the big issues, a lot of these LPs are institutions that actually need money, in the sense you could be an endowment and you need to provide a certain number of scholarships every year. So you get forced into selling in that period because there is no return of capital from the private equity industry. So some of these people have been forced to sell at rock bottom prices or distressed sales in those periods, and I think those are wounds that are not going to be easy to fill.
Okay, so let me ask you the favorite journalist question, and that is always to do with what are your sectors that you like investing in? What's looking interesting over the next 6 months?
We can hold hands.
What do you think?
We just discussed this yesterday.
What do you think of how the markets have run up, and whether, because I mean that provides you with the best, and the IPO market's just finally picking up. So in terms of where you expect the equity markets to be headed in the next 6 months?
I think infrastructure is clearly the big thrust area for the next few years.
Okay.
And in infrastructure, I think it'll be businesses which are more focused on the domestic side for now.
Power is
one. I think education is another interesting opportunity.
Okay.
We invested a lot in the transportation side, which is seeing some challenging times today just because traffic is down here. But that's going to pick up once global trade picks up again.
Okay.
So that's the private equity mood in India. It's time to take a break, but on the other side, can India ever be a buyout market?
Private equity investor.